What is going on, investors? Hopefully, you guys are doing well out there. A somber video today. In fact, we'll have a moment of silence here in a moment for the PayPal bulls. Let's take a moment right now and think about all the bulls, all the pumpers, all the fanboys and PayPal bros over the past year, over the past couple of years that have been telling you to buy the payment giant PayPal. Let's have a moment of silence for all of those investors. Thank you. What is going on, investors? Hopefully you guys are doing well out there. Time for our quarterly update on PayPal Holdings. Ticker symbol PYPL. The company just reported their Q4 numbers. Gave us a little insight to the Q1 as well. We'll go into them. We'll take a look at the expectations Wall Street had, compare them to what PayPal delivered. We'll jump over here to the numbers. While there's many financial channels here on YouTube giving you all these different financial metrics at PayPal that you should be paying attention to, I'll show you the ones that actually matter. We'll take a look at the balance sheet, everything that you need to know, and really the most important thing, which almost every time I post one of these videos, the PayPal pumpers, they try to argue with the technical pattern and the trend that PayPal has been making for really a long period of time. And I'll tell you, the moment you'll know when PayPal stock has actually bottomed and when you actually buy the dip. Because when we look at PayPal, first of all, it's a great brand. It's a company that's been around a long time. We jump over here to the financials. It's still a company with plenty of revenue. While the revenue growth is not absolutely sensational, high single digits, you're not paying a huge premium. When you look at the price to earnings, price to sales, price to anything, the company's not wildly overvalued. But over the last year, you simply have not performed in PayPal. Shares of PayPal down 22%. Look, over the last 5 years, you're underwater on this stock. Over the last 5 years, you could have bought darn near anything. You could have bought dirt on the ground and made a return. In PayPal, you would have lost 30%. Imagine if you had your money in NVIDIA, QQQ, just the freaking S&P 500, Apple, Microsoft, Google, Amazon, just about anything had a positive return. PayPal has not delivered for investors, but I think there's probably going to be a moment here really soon where it will. You've just got to be patient and you got to time it correctly. Now, revenue coming in at $8 billion in the most recent quarter. That was 8.1% growth year over year. Beat expectations by about $130 million. Now, I'm seeing in the after-hour shares of PayPal down about 3.75%, but God only knows. You get on the conference call, you talk things up. Maybe the company's able to turn it around. Now, the guidance that they gave us was for Q1 adjusted EPS, not straight EPS. They're going to adjust some things out of this, likely stock-based compensation, maybe a few other line items. Last year, they earned $1.17. They're saying they're going to have mid-single-digit growth, implying maybe about $1.23 on that EPS when Wall Street was expecting a number close to $1.26. On the revenue side, you got to imagine it's somewhere in line with the $7.5 billion that Wall Street expects. Obviously, a little bit down from the Q4, but Q4, a lot of people are using PayPal, obviously, for Christmas shopping. Payment volumes just go up, obviously, in Q4. Now, you had that really nice $8 billion in revenue. Again, 7.4 the previous quarter. It's not one of these lightning fast growth companies, and really, it's hard to understand or hard to really pinpoint something that would really turn around PayPal's fortunes on a dime. There's so many options to pay out there from if you're looking just the buy now, pay later space, if you're looking at Apple Pay, you're looking at all the different credit cards out there. There's just so many payment options. PayPal used to be a very dominant force in this. It just simply is one of many now. Your transaction expense is going to go up with your payment volume, and so you'd expect that. Your transaction and credit losses, also you would expect to trend up, although not all the time, but it's done a nice job kind of maintaining relatively flat. Where PayPal has made some cost cut is in customer support and operations. And this is certainly not great from a growth perspective, right? We're wondering, how does PayPal kind of reaccelerate from kind of that low because clearly investors don't care about low single digit revenue. Otherwise, shares of PayPal would actually be outperforming dirt on the ground over the past 5 years. Again, if you invested simply in dirt on the ground, you actually would not have lost 30%. And depending on where that dirt was located, it might have actually appreciated over the past 5 years. PayPal, on the other hand, you've actually lost money, and now they're cutting customer support and operations. And we'll look at active user accounts here in a moment. And I tell you what, one of the rubs on PayPal is they suck at customer service. And if you have a problem with them, they tend to kind of stick it up your you-know-what in terms of customer service. So that's a problem. They continue to cut back there. Sales and marketing also cutting back there in terms of total expenses. You see it on the full year as well. They're driving down costs. Now, that's great from a profitability perspective, but is it great for PayPal's future growth if they're cutting down on sales and marketing, cutting down on customer support? Look what they're also cutting down on. Technology and development, essentially R&D, from 822 down to 770. Notice for the full year, it paints the same story. Now, unfortunately, G&A costs, which is just kind of your back office stuff, sometimes it's executive travel and those types of things, that actually ticked up in the most recent quarter, and for the full year, roughly flat. Operating income coming in at $1.7 billion. That compares to about $1.3 billion the year before. We did get a favorable restructuring addition here, although that was negatively impacted last year. For the full year, you printed about $5 billion in operating income. And again, for a market cap $68 billion company, no, it's not wildly overvalued. From an operating income perspective, flow down to net income, $4.2 billion on a $68 billion company. Again, it's not wildly overvalued, but clear. And that's the argument most PayPal bulls are going to make. They're going to point to the PE. They're going to point to some valuation metric. And I'll just point to you again. Investors don't give a crap, because over the past 5 years, they haven't been willing to pay a higher price for the shares. And over the past year, while virtually every other sector of the stock market is up, PayPal just has not been able to catch a bid. From a cash flow perspective, things are looking pretty good. Actually really good. $2.6 billion in the most recent quarter, $1.6 last year. Nice acceleration there. For the full year, we trended down, though, from 5.8 down to 4.8. So Q4 was particularly good, but the other quarters not as much. From an investment side, obviously, this is a payment processor, more or less. They're not having to invest a lot in property, plant, and equipment. They're not doing a lot of acquisitions at the current time. So for the most part, a lot of that cash flow isn't chewed up by other things. Flow down to the customer metrics down here, and you're really seeing kind of across the board, increase in transaction revenues, increase in number of transactions. But in terms of active accounts, what you are seeing is a decline, almost a perpetual decline over the past several quarters, although 1%. You are seeing less people be active on PayPal, but those that remain active on PayPal continue to drive up their number of payment transactions and their total payment spend. That's why I'm slightly concerned that PayPal is not investing as much into their sales and marketing, customer support, and technology and development, because some of that stuff I think is driving away customers from PayPal. And as PayPal's customer metrics proves, once they bring you in the door, your payment volumes and payment transactions actually increase. So this company actually needs to bring people on and bring more users onto the platform. And I think you do that with sales and marketing, promotions, those types of things, new technology, stuff that makes it exciting to use, and having good customer support. So when somebody has a problem, it gets solved very quickly, and they have the confidence to continue to use PayPal in the future. From a balance sheet perspective, nothing to be overly concerned about, or really nothing even to get excited about as well. Plenty of cash on the balance sheet, balanced off by some long-term debt. Now, from a technical perspective, I can't tell you how many times I've pulled up this chart and told you that the trend is that buyers are stepping in at a lower price. Sellers are stepping in at a lower price. That is a downtrend. And the fact that PayPal, yes, off the previous earnings back in October, rallied from, call it $50 per share up to $63, that was actually expected. If you look at the technical pattern, when you are in these downward channels, you reach the bottom of the channel, you tend to have a rally back up to the top. And that's what PayPal has been doing for nearly 2 years now. If you want to extend it back to the big drop after the pandemic, it's even more so. What worries me about PayPal is we have a cluster of accumulation back when the stock IPO'd down here at the 30s. In my opinion, it looks like we're making a beeline at some point back to retest those areas of the stock. And the reason why I believe that is the technical pattern has simply not been broken with PayPal. You were down here at the bottom. You rallied up to the top. I'm seeing in the after hours shares of PayPal now down over 6.5%. It's showing me that we were not able to push to a new high. And this is critical for all you PayPal bros, all you guys that have been holding this stock and are now deeply underwater on this. The bottom in PayPal is discovered once the price of the shares push above the previous clusters of high, which are up here at about $78 per share. That showed you that buyers incrementally stepped in at a higher price, and also that the sellers didn't incrementally sell in and sell their shares. They actually waited, and there was accumulation of PayPal at a higher price that would break the technical pattern that you're in, but it simply has not been done. Looks like to me we're going to make a new lower low on PayPal. Probably over the next 2.5 months, you are going to get south of $49 per share. You will make a new low on PayPal somewhere down there. Now, from a short-term perspective, that's your next opportunity to buy. Set a stop loss just shortly under that, and you could play the rebound up to the top of the trend line, but you've got to sell up here because unless PayPal breaks above the cluster of highs that we just made at $65, if you don't break above that convincingly with green candles, it means this technical pattern will just continue until it simply doesn't. You have to have the patience to wait for the technical pattern to change. If you don't have the patience to do that, you are going to be sitting on a stock which over the last year is down 24%, over the last 5 years is down 30%, and even over the last 10 years, I don't got a number on it, but you're actually not up very much over the past 10 years, certainly compared to even the S&P 500, but obviously other very well-performing investments like anything in the technology sector. Folks, the PayPal trend has been intact. It is still intact. This is a low-growth company with not a lot of upside. It has to convince investors to put their dollar into this company because that dollar is competing against going into stocks like Nvidia, which literally go up every single freaking day, or going into stocks like Meta, which also not only go up every single day, but also announced a new 50-cent dividend. So there's a lot of opportunities for investors to put their dollar in places, and stocks that have simply continued to go down and down and down are not a great choice. You got to wait till the technical pattern reverses. And that's your move, and that's your opportunity on PayPal. I've told you that for nearly a year here on the channel, and if you want to argue with me down in the comments, you will lose. Thanks for tuning in today. We'll talk to you again soon. Good luck with your investments.